Minister Narendra Modi, where quite a few things were talked about. We talked about bilateral relations, you talked about the potential trade deal that is being worked on between the two sides. And somehow all of that is being factored in by the market. What are the implications of that? We've been speaking about that with the leading voices as well. As things stand, you have the equity markets that are more or less sanguine. You have the Nifty 50 that's almost completely unchanged. In trade yesterday also, you saw not too much of a move, pretty range bound. Let's look at the broader markets as well and see where it's currently at. You have let's pull up the mid cap index as well as we speak, and the small cap index. The mid cap index is okay, the small cap index down about 2%. If we can pull up the mid cap index as well, just to talk about it. If we can pull up the mid cap index as well. Okay, so there seems to be an issue with the ticker at this juncture, but the small cap index losing about 2% or so. Hindalco is a stock that we're talking about at this juncture, and because of earnings, and in fact we have a conversation lined up with Mr. Satish Pai, who's the managing director of the company. Blowout numbers by the company despite weakness in Novelis. Here's what the management had to say.
I think that the upstream EBITDA per ton is good, but as our downstream capacities expand, the new 170 KT Aditya rolling mill is being commissioned this week as we speak. So our downstream volumes are going to jump to 600,000 tons per year from next year. So I think that we are expecting the downstream EBITDA to go about $250 per ton. This 250 is on top of the upstream EBITDA per ton. So I think that starting from next year, you should see a substantial contribution coming from the downstream side of aluminum.
Yeah. And in terms of the Aditya FRP project, 8,000 crore project cost, are we well within that range, and how much is done till now?
No, the Aditya Alumina project was 8,000 crores. The Aditya rolling plant was about 3,500 crores. So that has been commissioned. The alumina plant, we have now started the construction work, which will be commissioned late FY26.
Got it. And I want to come to the aluminium, upstream and copper segments as well. They did do well this quarter. However, shipments were flat. Any key reason of why this was the case, and what's the outlook going forward?
The shipment is flat because we are running at full capacity. So we have whatever volume we produce, we are shipping. So on the upstream side, now we will have to wait for our alumina and aluminium smelter expansion projects that we are kicking off. And on the copper side as well, we have started the copper smelter expansion project as well. So over the next 3 years, we will be investing about 40,000 crores to do these upstream expansion projects.
And in terms of demand, especially in India, are there any segments or pockets that are seeing better demand? And is there any concern regarding something like an auto segment?
So most of the sectors, electrical sector, packaging, white goods, all these, the demand has been extremely strong. I think in the third quarter, as you said, auto was a little bit weak, but we are expecting to see a bounce back in Q4.
And in terms of pricing, you've seen aluminium and copper pricing clearly benefit the company in Q3. In terms of Q4, aluminium future prices up about 2%. So what's the outlook on pricing? You have the China stimulus coming through, but how do you see prices pan out in Q4, especially as well as FY26?
So I think that the aluminium prices for aluminium are currently running around 2,600. And I think that we should see this staying because the supply demand is quite tight. There is a lot of uncertainties with tariffs and sanctions. So I think you're going to see LME prices of aluminium stay at this 2,600 levels for next year as well.
I also want to talk a little bit about Novelis. They have been under pressure because of the higher scrap prices. In terms of Hindalco as a whole, do you expect this kind of weakness to impact the overall margins, or is this being, offsetted by the India business?
So if you see Q3, the India business more than offset the weakness in Novelis. But we have said that Novelis Q4 performance will be a bounce back from the seasonally low Q3 quarter. So volumes come back, pricing is going up. So I think in Q4, you will see Novelis bounce back to the Q2 levels, and the India business should continue to be quite strong in Q4 as well. So Q4 should be a much better quarter for us than compared to Q3.
Got it. And, there's a lot of uncertainty, tariffs on aluminium. I do understand that Novelis is a US-based subsidiary, so it is cushioned. But, could you maybe give the viewer some context about if Hindalco is cushioned from this tariff uncertainty or if there is some exposure?
So see, our analysis of the current situation, as you rightfully said, for Novelis, it's neutral to positive. When you look at the Hindalco India business, we hardly export any metal to the US. Most of our exports go to the Asia side. So at this stage, we do not see a big negative impact on Hindalco, but we'll have to wait and watch. Currently for Novelis, it's a neutral to positive type of an outlook.
I also wanted to get your Capex guidance. Last quarter, the $4 to $5 billion over several years on various projects. I wanted to get a better breakdown. FY25, how much has been spent and will be spent, and what's the kind of outlook for FY26 and the allocations, if you may.
Right. So Novelis will be spending roughly about 1.5 to 1.6 billion on the Bay Minette project in FY26. Their capex this year was in Bay Minette about $1.2 billion. If you look at the Hindalco India business, our capex this year will be around 6,000 crores. Next year, it will be more like 8,000 crores as many of our upstream projects start.
And lastly, I want to end the net debt has seen an uptick. I do understand that you have a lot of Capex plans, but when will this peak at, and how much do we expect it to keep rising every quarter?
So the net debt to EBITDA increase is purely because of Novelis, which is doing the 4 billion Bay Minette project. So we have already guided that the Novelis net debt to EBITDA in FY27, late 26 can reach about 3.5. And then as the project kicks in, the net debt to EBITDA will go down. I think on the India side, it's fair to say that the net debt to EBITDA will never cross 1. So on a console level, you're looking at more like a 2 as a max net debt to EBITDA over next year.
Lastly, I wanted to get your kind of sense. We are already halfway into Q4. What kind of growth can investors expect in terms of FY25 on the financial side? Maybe it's on the top line or the bottom line or even the EBITDA per ton.
Well, I think that FY25 will be a great year for Hindalco. And I think that, we are, as you said, halfway through Q4. So Q4 is looking better than Q3 already.
Okay, so Q4 is looking better than Q3 for Hindalco. The stock giving up early gains, in fact, dropping over 2% from the high point of the day to trade almost completely unchanged at this point. And quite a few stocks that had gained early on in the session are losing ground. And in fact, you see quite a bit of selling in the broader end of the spectrum. We were talking about that before the Hindalco conversation started. You have the broader markets that are capitulating at this point. The mid-cap index down about 1.7% and the small-cap index down over 2% at this point. And a lot of individual names are reacting to earnings. We spoke about this in India Market Open earlier in the day, where a lot of the earnings that were reported post-market hours yesterday have actually been a little bit disappointing. And you see on the screen right now as well, a very sharp drop in the benchmark Nifty 50 as well. Of course, cuts off only about 0.4% as we speak, but certainly pressure coming through in the way of selling. Pull up the advanced decline ratio as well, and you will notice that there is a widening that has taken place over the course of the session. Let's pull up the lines if we possibly can, because that will indicate over the course of the session how that has changed. At this juncture, it is very firmly tilted in favor of the declines. There you go. So widening gap between advances and declines, and the mouth is getting wider as we speak. I want to take you through a few names that have stood out. Let me first talk about the stocks that have benefited. Perhaps you can get a few ideas on what you want to speak to us about. Godfrey Phillips has stood out in terms of a winning quarter. UBL, interestingly, despite a halving of its profits, is actually gaining as much as 3%. We've got a management commentary or conversation lined up for you, but a lot of disappointments as well. Let's run through the list very quickly. Manappuram Finance, higher provisionings has hurt the results. Carborundum Universal, the weak results have come through, and this is a miss on estimates. It's down. You have Senco Gold, which is getting beaten down in trade right now. The profit has fallen 70%. Deepak Nitrite, the profit is halved It's also missed estimates, and Concord Biotech is also a disappointment on the numbers. So quite a few names like this getting beaten down in trade. We've got Sameer Dalal and Jatin Gedia joining us this morning. Thank you so much, gentlemen, for joining in, for waiting by. These interruptions on account of management chats will, I think, be limited to this week, and they'll dissipate next week. So we won't be interrupted because the earnings season will be over. But thanks so much for taking the time and for your patience. I believe we've got our first caller for the day. We've got Murli joining in from Bengaluru. Murli, hi. Thanks so much for calling us. How can we help you today? Murli, can you hear me? Okay, let's move on to the first questions on WhatsApp. Actually, before we do that, let me go to Jatin. Jatin, I'm going to come to you on how you're seeing the texture shift, because we started in a mildly positive zone, and that seems to be getting beaten up or given up right now. What are the key levels to watch on the downside? Because I think certain key levels are already being breached, aren't they?
Yeah, so 23,000 was the key level that we were waiting and watching closely, because that was a psychological support for the Nifty. However, that has been breached on the downside. So the next level on the downside to watch out for is the swing low that was formed a couple of days back, 22,798, 797. But overall, we believe that the Nifty has more downside even from current levels or from the levels of 22,800. Ultimately, we believe that below 22,800, the Nifty can slip towards 22,670 on the downside. So 22,670, 22,600 are the levels with which we are working as of now. Any intraday pullbacks or minor degree pullbacks that we saw in the last couple of trading sessions, we have been recommending to go short. So our view remains negative on the Nifty for 22,670 target.
670, so there's further downside on the cards. All right, and that 23,000 mark has been broken on the downside. We've got a first question on WhatsApp from Mohan Iyer, who points out that he's a regular viewer of NDTV Profit. Thanks so much for joining in, Mohan. And the question is on VIP Industries. If I remember correctly, it was a disappointment on the numbers. Let's see where it's currently trading. 700 rupees is the buy price, and he's lost half of the value. 350 is the current market price. Sameer, how much patience would you have with this, and would you book it? Would you move to something else to try and protect against further downside?
So honestly, if you ask me, I think there's limited downside left in VIP Industries, right? So look, the business has gone through a certain bit of difficulties because of certain issues that happen in Bangladesh, where they have some of the manufacturing. But I think now that is all going to be behind it, and we expect that there will be a turnaround. Yes, consumption has been a bit, but like I said, we discussed in the last few calls that the consumption theme is expected to change going forward, given the fact that we have more disposable income left in the hand of the end consumer, thanks to the government. So that obviously is going to lead to some amount of turnaround and demand driving, and that will lead to operating leverages. Additionally, there's also a lot of talk around the change in management that is expected. There's constant chatter around the fact that the current promoters want to exit the business. So once a new promoter comes, if it happens, that could be also something that should be watched out for. So we see limited downside in VIP from this point of time. We think there is good upside. One should stay put and not exit the stock.
Interesting question coming in from Raj, who's writing in from Tanjore in Tamil Nadu, and asking about EIH. And we were speaking about this earlier on in the day, Sameer. About a decade and a half back, there was one, maybe two hotel stocks to talk about, and now we have a whole bouquet to talk about, right? So he's invested in EIH Limited at a price of 166. So despite the drop that you saw from the high point, he's still making a sizable profit. The question that he's asking is, for the long term, and he bought in April of 2023, would you hold on to this, or would you switch to something like an ITC Hotels? Of course, we got the update from BAT earlier today saying that they will be selling stake in the company. Let's in fact pull up ITC Hotels while we're at it, just so that we know the level that it is at currently. It is down about 3% or so, perhaps on account of that, at 165. Sameer?
So I don't have active coverage on EIH, so I won't be able to comment on that one. But what I can say is, like we discussed for the previous stock VIP, that the consumer discretionary side has gone through a bit of pain. Of course, the hotel industry is not, for the simple reason that domestic tourism has seen a good uptick. But with more money, once again, I'm saying the same thing at the risk of repeating myself, that with more money at the end consumer, the possibility is you will see increase in tourism also. So there will be different pockets of people spending on different things, some on QSR, some on FMCG, some on travel and tourism. So we believe that the opportunity is quite large for the hotel industry. What we are beginning to see is that consolidation has been happening, because what's happening is more and more of these old hotels are getting refurbished and being taken up by some of the existing big brand chains, which are able to, up the ARR for that business opportunity. And as long as it's not fresh, new projects being set up, if you see, the demand has been increasing far more in the hotel industry, and you can talk to anybody in the hotel industry, they'll give you an idea that the number of new room additions versus the kind of demand growth that is coming is quite a stark difference. So ARRs will eventually move up, and this business drives on two things, basically, is the ARR and the occupancy. So we believe occupancy will remain strong and ARRs could move up, which could lead to increase in profitability. So we are positive on the hotel industry. EIH, of course, is a very big brand and a lot of good properties that they have. So I don't want to say you need to exit it, but I think anyone who's in this space will do well. ITC is also one of the players who has been growing. They have 5 different brands that they work from premium to the affordable. So I think ITC also is a good investment. Bad selling is an opportunity for somebody else to get in. I think the growth for this space is going to be good. So ITC, IEH, any of them could be a good investment to make. I mean, you need to study EIH, I haven't, but ITC is something that we do like also.
Okay. In case, viewers, in case you were wondering and you haven't looked at hotels very closely, which is understandable, ARR, which was just spoken about as a key metric that you should track, is the average room rent. So the two metrics, of course, is the occupancy, which is effectively capacity utilization, and the rate that is charged on an average in these hotels. So certainly very, very key insights being provided to you on the hotel side. Let's talk about the next caller, and we've got Dheeraj calling in from Hyderabad. Dheeraj, you're asking about arguably the stock of the day and losing a lot of ground. What's your question?
Sir, good morning.
Good morning.
I bought Senco Gold today actually, 1100 shares of Senco Gold at 367 rupees. So I'm expecting a comeback from it soon. As they announced their results, their revenue is fine, but
margins.
Their estimates, I guess.
Yeah. So, but then you bought it today, Dheeraj, thinking of the long term, is it?
No, sir, for a short-term trading purpose, I have bought it.
Okay. So, Jatin, it's a short-term trading idea. This is the very definition of trying to catch a falling knife, unfortunately, and I hope that he doesn't get cut. What's the view?
I think the most simple answer would be to exit. Whatever losses he is incurring, I think he'll get a better opportunity, but today is definitely a day where he should take the loss and exit the recommendation at the current market.
Exit. And what are the levels on the downside that you would watch for on Senco Gold?
Yeah, so the crucial levels or the crucial support kicks in the range of 340 to 335. So that's a considerable downside even from current levels, around 25 points downside. So better he should exit.
Dheeraj, it's a good point to make, and unfortunately you are losing money on this trade. Generally the advice is to not try and do that. It's market wisdom. Don't try and catch a falling knife. Try and catch it on the upside. You might miss a little bit of ground, but then it's a better strategy. At least you won't lose value. We've got the next caller from Hyderabad. Govind is calling us. Govind, good morning. How can we help you?
Yeah, very good morning, sir.
Good morning. Please go ahead.
Sir, actually, I have on IRCTC at the broad price of 174 rupees 3,000 shares, and NHPC at the rate of 90 rupees 3,000 shares. Sir.
Sorry, Govind sir. I'm going to have to ask you to choose one of the two. Shall I ask on IRFC?
NHPC, sir. NHPC.
So you want me to focus on NHPC. What is your buy price on NHPC?
90 rupees, sir. 90 rupees.
90 rupees, okay. And do you have a long-term time frame on NHPC?
Yes, sir. Both are long term, sir. Perfect. Have purchased whether it is where it is can hold or book losses or any average there.
Okay. And what is the quantity of your NHPC shares?
3,000, sir. 3,000.
Okay, 3,000 or more.
number.
Okay, 3,000. All right. So it's a long-term view that is being sought on NHPC. I cannot remember the numbers right now. Samir, I know the results are out. What is your anticipation on this? He lost a little bit of value, but should he hold on?
So I do believe he should hold on. So I will say, Alex, I also haven't had a chance to go through the numbers, but we do have NHPC under coverage and we have a positive view on it. So look, at the end of the day, we've been saying this for the power sector for some time, that the opportunity for growth, especially in the power generation space, is quite large. NHPC already has a decent amount of capacity that they've set up, and they're constantly increasing that. They're going to be setting up some more renewable energy through the solar space as well. So we believe that the growth is going to come through. The profitability will remain strong. So I haven't seen the current quarter numbers, so I can't comment on those. But we have a positive view. We think valuations are fair at the moment. They're not cheap. So it's not like you're going to get a valuation re-rating. But what you are going to get is the growth opportunity over the next 3 years. So if you have a long-term view, which your investors, I mean, your caller says he does, I think you can stay invested. And if it falls closer to the 60 areas, you can add on to that sum.
I just have the snapshot, Govind. So NHPC reported a 10% rise in top line and a 28% increase in expenses, which resulted in a little bit of a dent in the profitability in the quarter. So certainly it's a hold on the long term basis, the recommendation that Samir has. We have to slip into a very quick break. On the other side, we've got a management interview. I know that some of you have asked about Senco Gold, and I'm sure that you want to know about the trajectory going forward. We've got that lined up for you, so do stay tuned.
सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेज़ी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset.
Welcome back. You're watching Ask Profit, and we're seeing cracks on the screen actually right now. We began with a positive texture, but you are trading at the lower point of the day for the Nifty 50, down about 0.5%. Similar signs for the mid-cap and the small-cap index. They're trading with cuts of over 2%. In fact, for the small-cap index, we're trading with cuts of close to 3% at this point. And it's not a pretty picture, 2.7%. But look at the weekly performance as well. It's been a torrid week for the equity markets. About 3% or thereabouts for the Nifty mid-cap index. But you have significant cuts for the broader end of the spectrum, cuts of 7% or thereabouts for the mid-cap index, cuts of 9% for the small-cap index. And in fact, a lot of names getting beaten down on the back of earnings. We spoke about one such earlier today, and that is Senco Gold. The numbers proved to be a little bit of a disappointment based on what was anticipating. It is currently trading with cuts of 20%. I believe we've got the management joining in right now, and we've got Suvakar Sen, who is joining in from Senco Gold. Mr. Sen, thank you so much for taking the time. It's a tough day for you in the equity market, and a lot of the investors that have been holding your stock are seeing that as well. Why? And I think a lot of people are focusing on the contraction, the significant contraction in the margin in the quarter gone by. Why did that take place?
So see, if you look at Q3 of last year to Q3 of this year, the 2-3 reasons why the margins have gone down. One is the duty cut that was done in the month of July, which has its impact on the overall numbers. So we have taken a 58 crore impact due to the duty cut. A part of it was taken in Q2 and a part of it is taken in Q3. So that has been one reason. The second reason have been that in the till Q3 for H1, Q1 and Q2, we have seen that the share of diamond jewelry sale in the overall jewelry sale has been on the lower side. So, in terms of overall gross margins, gold, we have seen a 22% growth in terms of, overall numbers. And in the whole consolidated part of the company, we have seen a 27% growth. But the growth has majorly come from sale of gold jewelry. And the share of diamond jewelry has been down, which means that the impact on gross margins has been on the lower side. And as a result, the EBITDA has been on the lower side. And the third thing is that because of the drastic price movement of gold, we have seen that the hedging impact that we had to take in Q3 led to a lower number overall. But again, what we are trying to explain to everyone is that if you look at the 9 months performance, Q1, Q2, Q3 all put together, then in the previous financial year, we had seen that the 9 months performance EBITDA of the whole company was 7%, which in today's day and time, after adjustment for customs duty, is 6%. So it is only an impact of 1%, that we see due to the lower stud ratio. But yes, what the street and the investors were expecting is that usually Q3 has a great quarter in terms of top line as well as bottom line. But this time, because Q1 and Q2 had a much higher percentage in terms of bottom line, the street is little disappointed. But what we are trying to assure and tell everyone is we have seen the trend, the sales continue to happen. We are expecting a growth of 20% year on year in terms of overall top line. The share and the sales of diamond jewelry in the last 2 months have started picking up, and it is growing at 50%. Year on year for December, January, February. So we are confident we will move back towards higher EBITDA and a higher profit.
Point made. I do want to ask, and Mahima is joining me as well. She will soon join this conversation. But the clarification that I was seeking is this customs duty impact 1 that you have taken in the last quarter. Is that over and done with? And heading into the fourth quarter, from the perspective of the inventory that you had, the impact of finance costs which were 20% higher, all of these headwinds that you seem to have faced in the third quarter, how much of that bleeds into the fourth quarter?
So the impact of custom duty has been taken in Q2 and Q3. So the fourth quarter will not have any more impact on customs duty. And the finance costs that we have seen and impacted, that finance cost for the purpose of jewelry and gold loan. So we had raised money from QIB, which will control the finance cost to a certain extent. So I think Q4 will be not impacted by either customs duty or finance cost. And we look to have a much better EBITDA and gross margin for Q4 and going forward for the next financial year as well.
Mr. Sen, Mahima also joining in. I just wanted to understand, in your P&L, the line item that is changes of inventories and finished goods, that has always been a negative figure. In Q4 3 of FY24, it was around negative 270 crore, but that has turned positive this 9 to, around 29 odd crores. What has brought that change? Because that is the line item which is kind of, hampering the profits overall.
Dhanteras was in the month of October. And we have been building up inventory in the month of August and September for, the purpose of Dhanteras. The gold prices movement has also happened, for the month of October, November, December. So I think that it's all a part of the normal course of business, that in certain quarters, you have seen that the inventory has been on a, has been reduced. The sales have been higher than the procurement. And in certain quarters, the procurement has been higher in a build-up and expectation of the upcoming season. And that is what impacts on the line item. But if you look at a longer period of time, say 9 months or, the whole of year, you will see that it will normalize to a level where the EBITDA will be close to 7%.
Okay, Mr. Sen, we've discussed this before also, but now I think is the time when lab-grown diamonds have actually picked up. And, Senis is the brand which is for you selling lab-grown diamonds. What's the kind of trends that you've observed? And do you think that, because of pickup in the sales of lab-grown diamonds, your margins have been impacted?
No, lab-grown diamond sales, if you look at the overall sales, is much at, say, below 1%. So till now, if we've seen the sales of diamond jewelry, the natural diamonds have been much more, and that is available in all of our stores. Lab-grown diamonds are available only in the selected 4-5 stores that we have. That is number one. In terms of the sales trend of lab-grown diamonds, we have seen that it is usually the bigger size diamonds of, say, close to 1 carat in terms of rings, pendants, earrings, that is selling more in lab-grown diamonds. When it comes to the smaller size diamonds, it's usually the natural diamonds that is selling more, which is 90% of our overall sales, that the small size diamonds sell in the overall diamond sale. So yes, in the long run, I'm quite confident that lab-grown diamond will capture more and more market share. But the natural diamonds and lab-grown diamonds both will continue to remain, and we have to hedge ourselves and create 2 separate brands to cater to the 2 different needs and taste of the consumer. And I must tell you that, as I said, the January, February, we have seen that the demand for diamonds, because now that the Russia-Ukraine war is about to be over, we are all expecting that the prices of diamond will stabilize and start moving upwards. But the demand for diamonds have started picking up in a big way. Last 2-3 months, we have seen that year on year, the diamond jewelry sales have gone up by almost close to 50%. So for the whole year, while we see a 19% growth in terms of diamond jewelry sale, the last 2-3 months have seen a big jump. It was only that the share of diamond jewelry sale in the first half of the year was much lower, which is impacting on the overall gross margin. But things will again normalize back to higher diamond jewelry sale.
Okay, on that point then, am I right in saying that the studded jewelry ratio or the share is about 10%? And what is the steady state? So you mentioned as one of the factors that led to that contraction in the EBITDA margin was a lower than expected share. What is the ideal share for you then?
So our endeavor is that over the coming 2-3 years, we take it towards 15%. And last year, our studded jewelry share was 11.5%. But this particular year, till about end of Q3, it was 10.5%.
Mr.
So
Sen,
you can imagine.
Mr. Sen, apologies for interrupting you, but I think your shareholders will be more focused on what will happen in the nearer term. I appreciate that you're saying 2 to 3 years, but what I'm trying to get is what you've seen.
11, yeah. It will move towards 11%. And in the coming year, it will move back to 11.5%. So, what exactly is happening, we all need to understand. Even in a diamond jewelry, there is a gold component and a diamond component and making charges. Now, the gold prices in the diamond jewelry is moving at a higher rate than the price of diamond. So overall, in the overall scenario, we are seeing that yes, diamond jewelry sales are going up, but the share of diamond as an overall jewelry sale is not going up to the extent that the share of gold is going up. And that is impacting on the gross margins. But in the near term, we are looking at 11 to 11.5% of studded jewelry.
11 to 11.5. Okay. So your guidance for EBITDA margin is in the range of 7 to 8%. We've spoken about why it's coming at 6% for the 9 months. Will you, because of what you've seen or with what you've seen in the first couple of months, a month and a half of this quarter, be able to at least match the lower end of that guidance in the full year?
Yes. So we will be moving closer to 7% in terms of the full year. The top line growth continues to remain strong. The sale of diamond jewelry continues to pick up. And from a 6% adjusted EBITDA that we have, we will be moving closer to 7% by the end of this year.
Okay. Mr. Sen, one last question. A lot of your peers, generally hedge 100% of their gold. But for you, the hedging ratio is around 80%. Are you also planning to move towards that 100% or will you stick with the 80%?
No, see, we have seen that our range of hedging has been in the range of 80 to 90%. And that is what we feel that, in terms of, because we are hedging the full inventory. And it is very much, sometimes I would say practically difficult to hedge up to 100% because there's always a price movement. And sometimes you're at 85, sometimes you're at 90. So we will continue to remain hedged for 80 to 90%, going forward as well, which is practical.
All right. And one last question, Mr. Sen. What's the value versus volume growth been like for this quarter?
The value versus volume growth. So the value growth for this quarter has been in a consolidated company level 27%. For the standalone company level, it has been 22%. So that has been the value versus volume growth for the overall company. For 9 months, if we look at gold growth, it has been 19%. For diamond jewelry growth, it has been 18%. So that is one of it. In terms of volume of gold, gold has grown by about 1 to 2%, and diamond has, it was negative 2-3% till say September, December quarter. It has picked up, and now diamond is at plus 2%. So this is the volume growth that we are seeing.
All right. Well, Mr. Sen, thank you so much for giving us those insights and answering all those questions candidly. And thank you so much for taking our time and speaking with us at NDTV Profit. All right. We have our next caller also lined up, coming back to Ask Profit. Mohan from Hyderabad is calling in. Mohan, a very good morning to you. And thank you so much for waiting. Go ahead with your query.
Yeah, thank you so much for the opportunity. Good morning, everyone. So I'm holding NCC Nagarjuna Construction shares from a long-term view.
Okay.
The question that I have is, I'm holding at 90 rupees. I mean, it was 5,000 quantity. Of course, I exited about 2,000 when it touched 186.
Okay.
And then it went up to 365. Now with the recent quarter, the share was so much down. It was thrown down completely. So I'm just trying to understand what's the long-term view. While the analyst, average analyst rating is to hold it with an average rating of 360 or 400. So I just wanted to understand, from a horizon point of view, I can hold it up to 1-2 years. But yeah, I would like to take your view as well.
All right. Mohan, understood your query. Samir, I'll come to you. Good morning to you, Samir. NCC is the counter. He's sitting on a good profit number of around 3.4 lakh. But, the stock has significantly come down from, the highest levels. What's your view with respect to the long-term prospects of the company?
So, Mahima, thank you. For asking this question, because we've had this question quite a few times, but you got to understand one thing, that it's not only one stock, NCC, that's fallen. I think across the board, every stock has fallen in this current correction of this market, right? Now, NCC has probably fallen a little bit harder for the simple reason that the last quarter results were a little muted or subdued. We saw operating margins coming off. But you also got to realize that, these are construction projects which are long projects. And we've always discussed this with you, that when you have longer term projects, there are certain points of completion of project where you can start recognizing the profitability for the project. So normally how it works is in the first 20% of a project when you're executing, it's just the cost that you can recover and charge the revenue for. You start charging the profitability and the margin only once you get past the 20% closer to the 60%, and then from 60% on, the margins start accelerating a bit more because you're getting closer to the completion. So during the current quarter, it could very well be that there could have been some increase. Some of the projects which were not in the phase where they were to get their operations, the EBITDA, but that will start coming in the next quarter. So sometimes you will get this lumpiness in profitability for companies like this. But like I said, at the point that India is, and we believe that the infrastructure spend is going to remain high, NCC is a player who's obviously delivered a lot of projects, has good balance sheet, and has a good growth opportunity given its order backlog and the future orders that they're tendering for. So we believe the growth trajectory will continue. The operating margins will come back to normalization and start moving up as you get to that point of completion. And this is actually a good time if somebody doesn't have the stock to add on. But for your current investor who's asking the question, I say stay invested in the stock.
Let's, Samir, talk about IRCTC, because the question coming in from Sundara Rajan, he's bought at levels of 603 for the long term, and he's wondering whether to hold or to switch to something else from the railway space, something like an RVNL. What's the view?
Stay put in IRCTC. So, okay, now the growth has been affected because of one point that I was part of the conference call that happened this time around. They said that they've captured 87% of the ticketing market, which has moved online. So the growth from that 87% is obviously going to be a little muted going forward, because at the end of the day, there's only 100% of the tickets. So once the additional train routes and more routes come up, you will see that normalized growth, but maybe capturing of market share will not exist. But what they're focusing on is the tourism packages business, where we've seen a very strong growth. And the opportunity in that business continues to remain very strong, since it's still a very small part of the overall business. As that sees more traction and more of these tour packages booked on IRCTC website start seeing an uptick, we will see the profitability continue to increase. It's kind of a monopoly business when it comes to the railways, when it comes to ticketing, and for food and the other services that are offered. Now, they've also done these tabs with Zomato and a couple of others where the revenue streams and the profitability is coming in. So this is a business which is debt-free, growing. Growth may be a little muted. Yes, valuations are a little expensive, but then in a monopoly business, you tend to pay premium valuations. So I say stay invested. And my view is that in the next year and a half, you could see the stock back above 1,000 rupees.
I do want to address markets at this stage, and let's pull up the sectoral index, because the indices, if we can, and just that heat map will tell you that the texture is completely different from what it was at the start. And we've got, just to give you some perspective at this stage, Sudeep Bandopadhyay, who is Group Chairman, ND Trade Capital, is joining us. Sudeep, please help me understand how you're reading this, because the gashes may not be very significant at the benchmark Nifty level, but at the broader end of the spectrum, you're seeing quite a bit of carnage. You see the small cap index that seems to be capitulating at this point. A lot of individual names losing a lot of ground. What are you seeing that is causing this?
Well, I think there is general uncertainty regarding what's going to happen as far as the tariffs are concerned. While the joint declaration was kind of reassuring, the fact remains that reciprocal tariffs doesn't kind of augur well for India at one level, and I think the concerns haven't really been assuaged. So the valuation concern continues to remain, the domestic challenges continues to remain. So under these circumstances, people are taking money off the table, and that's what is getting reflected in the market.
This is your own judgment though. So that may be the perception to say that we don't yet know what the implications of this reciprocal tariff is. It is that boogeyman or specter that currently is standing over your shoulder, but nothing has come to pass yet. We're talking about something that has in the past, even over the last couple of weeks, been used as a negotiating tactic, and the Prime Minister very clearly stating that both his team as well as President Donald Trump's team are working on a trade deal. So for something that has not yet come to pass, is this a question of people pulling money off the table? Would you attempt to deploy in some of these names that are getting beaten down too much?
Well, of course, people are pulling money out of the table, considering the uncertainty in the global environment as well as the challenges which are still existing in the domestic market. And remember, the valuations, even after correction, is not cheap in some of these small cap and mid cap names. So obviously, when the things are not really favorable and the valuations are rich, people would love to pull some money out, and that's what is happening. Also, remember the foreign institutional investors. Look at their perspective. They are getting a risk-free return of 4.5%. You assume a 4-5% rupee appreciation vis-a-vis US dollar. So you are looking at a rate of around 4 plus 4 or 4 plus 5, about 9%. Now, if they're willing to invest in equity in an emerging market, that also small cap, mid cap, they will definitely, look for a incremental return of 5-6% on top of that. So you're looking at a 15% return, minimum return, to kind of balance things out if they have to invest in small cap, mid cap, or even large cap. Now, I don't think that assurance they are getting at this stage. So money is being pulled out by foreign institutional investors like there is no tomorrow. I think combination and aggregation of all these facts is leading to this kind of correction. Market is trying to resurrect itself periodically based on news flows, but I think the selling pressure is little too much.
So, as I understand it, for the mutual fund industry as well, looking at the numbers that came through in the last fact sheets that were displayed, Sudeep, you have cash that has been deployed, but because of the drawdowns in the underlying asset, which is in equity, the percentage of cash sitting on the sidelines has actually gone up. So the industry has money to deploy. The question is, will they and can they consistently do this? For you in particular, are you keeping your powder dry as things stand right now, or will you be buying selectively, and where are you seeing opportunities?
Well, we are definitely advising clients and ourselves also keeping cash in hand to an extent. But honestly, there is excellent opportunities, but not in mid and large cap, mid and small cap. We are looking at opportunities in the large cap universe, and we believe there are excellent opportunities in the large cap universe if you are planning to build your portfolio for a longer duration. We do like banks. SBI in particular. We do like Reliance Industries at current levels. We do like LIC in the insurance space. We do like Ultratech in the cement space. I think corrections are providing excellent opportunity for building a long-term portfolio in large cap stocks. And instead of putting all the money to work, straight, it's better to deploy over a period of time in a phased manner.
Sudeep, thanks so much for joining in. Pleasure speaking with you as always, and thanks for that perspective. All right, let me take this next one because it is in line with what Sudeep was talking about at the end there. He was talking about buying select large cap names, and Vani wants to know whether or not to buy Reliance Industries. I know a few fund houses that have taken outsized positions in Reliance Industries and that have been disappointed because it's not performed at all. But the question is, would you buy this for the long term at this current level, which is close to that 1,200 mark? Jatin, what's the view on the charts?
See, in terms of Reliance, we are seeing a breakdown below this 1200 mark. So, yes, it's trading around that 1200 zone where a couple of swing lows are placed, but we don't see the structure turning out to be bullish pretty soon or until the price sustains about 1230, 1240 odd levels. So, it's not a price at which I would suggest to go long immediately, but definitely it should be kept on our radar. We believe that 1180, 1170 is a strong support zone, and once that is tested and we get a bullish development on the price pattern, then I think we can stick our neck out and say that the short-term bottom is in place. However, that process is still not complete, and we are expecting further downside from current levels. So one should wait and watch and not venture out and buy at current levels.
All right, so that's the view coming in on Reliance. We've got our next caller, Mahesh from Andhra Pradesh is calling in. Mahesh, a very good morning. I believe you have a query on TVS Supply.
Good morning, madam. I am Mahesh from Andhra Pradesh.
Right.
I want to know about the TVS Supply Chain Solution.
Okay.
It is issue price is 190.
Okay.
Under the brand name of TVS, I bought it at the rate of 170.
Okay.
Now it is downtrend.
Right.
Yesterday or day before yesterday, a black deal has been happened at the rate of 160.
Right.
What I have to do?
Okay.
What I have to do?
Okay, Jatin, I'll take this quickly with you. What are the levels that you're watching for TVS Supply on the charts?
In case of TVS supply chains, we believe that it's falling. It's in a free fall. So I believe that 120, 121 is the level that I'm getting on my chart. So it's a significant downside even from current levels. So the support levels are pretty low even from current market price.
All right, Mahesh, thanks. Mahesh, that's the view on TVS Supply. Jatin, thanks so much for that view. Samir as well, thank you so much for joining in and really appreciate both of your patience on this show. That brings us to the end of this edition of Ask Profit. It's been a pleasure bringing it to you. Do stay tuned, lots more coming up on NDTV Profit.
सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेज़ी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
The new tax
regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook... Hello and welcome to KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. Well, today we are taking a look at Century Plyboards. Now, this is an interesting company that we've been talking about. Well, in general, let me start by telling you about what this company does. And as